prepared.
Good evening, ladies and gentlemen. I'm Kritika, moderator of Marksans Pharma Q1 FY23 earnings call hosted by DAM Capital Advisors Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone telephone. Please note this conference is recorded. I would now like to hand over the floor to Mr. Nitin Agarwal of DAM Capital. Thank you, and over to you, sir.
Thanks, moderator. Hi, good evening, everyone, and a very warm welcome to Marksans Pharma Limited's Q1 FY23 post-results earnings call hosted by DAM Capital Advisors. On the call today, we are representing Marksans Pharma Management, Mr. Mark Saldana, Founder, Chairman, and Managing Director, and Mr. Jitendra Sharma, Chief Financial Officer. I'll hand over the call to Mark to make the opening comments, and then we'll open the floor for Q&A. Please go ahead, Mark.
Thank you, Nitin. Welcome, everyone, to our Q1 FY23 earning call. I'm pleased to share that we had a strong start to the year with a solid growth in the first quarter across our regions. Our US grew by 25.7%, while UK and Europe grew by 13.7%, driven by a strong volume growth and new product launches. Pricing erosion continued to be high in single digits in the US, impacting our generic business. However, our ROW revenue doubled, while Australia and New Zealand grew by 38%. The inflationary headwind continued in the quarter with the increase in cost of material and freight cost impacting our margins. However, we expect the situation to improve in the current year and cost pressures to be moderate. We have also started passing up a price increase to our customers. We have continued to be innovative and launch products supported by R&D capabilities. We have a strong product pipeline and plans to launch several new products in the next 2 years. This will drive a sustained growth momentum and hopefully improve our profitability. We obviously aim to increase our R&D spend to 4 to 5% of sales over the coming years. Our low-cost manufacturing capabilities provide us with a competitive edge. We do plan to expand our capacities over the next 12 to 18 months. This, along with our backward integration plan into API or our core molecules, will help us expand our margins in the near future. Our aim as a company is always to be a fully integrated company with our own API, formulation, manufacturing, and a forward integrated business module in the biggest markets. With this, I'd like to turn it over to Jitendra, who will update you on the financials before we can start our Q&A.
Thank you, sir. I will explain the financial performance of first quarter of financial year 22-23. Operating revenue was at rupees 433.8 crore, increase of 24.3% compared with rupees 349 crore last year. US and North America was the highest contributor at rupees 173.9 crores and witnessed 25.7% growth year on year. EU and UK formulations market recorded 13.7% growth, standing at rupees 181 crores. Australia and New Zealand formulation market recorded 37.8% growth at rupees 52.6 crores, whereas the rest of world recorded 99% increase in the sales to rupees 26.3 crores in Q1 of FY23. Gross profit was at 218.9 crores in Q1 of FY23, increasing by 17.3% year on year. Gross margin declined by 302 basis points from 53.5% to 50.5% in Q1 of FY23. EBITDA was at rupees 72.9 crore, decline of 5.8% year on year due to continued cost pressures. Our depreciation was at rupees 11.1 crore at a normalized level versus last quarter where it increased due to Ind AS 116 lease accounting. Consequently, our PAT was rupees 60.2 crore in Q1 FY23 compared to 62.6 crore in Q1 of FY22. and rupees 29.7 crore in Q4 of FY22. Our R&D spend in the quarter was at rupees 8.9 crore, that is around 2% of the sales. We continue to remain debt-free, and our cash and cash equivalent in the books was at rupees 339 crores as of 30th June 2022. With this, I would like to open the floor to the question and answers. Thank you very much.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask a question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. First question comes from Manoj Matthew Jacob, an individual investor. Please go ahead.
Hello. Mark, congratulations on the results. I have just 3 questions to you. Question number 1 is, this increase in turnover year on year, is it because of the additional capacity that has come into effect in the Goa plant? Because in 2020, after the March results, you said you're going to double the Goa plant production. So can we expect more turnover this year, or is this the turnover we could expect for the next quarters of this year? The second question is, as fast as when can we expect the API to come online? And since you said the core molecule, it will all be in the pain segment. Hello?
Yeah, I can hear you. I'm just waiting for your questions. I'll reply once you finish all the questions.
Yeah, I mean, I'm done. I'm done with the questions.
All right. Hi. So the increase in sales is obviously proportion to the capacity, and over time we have increased capacity. Every year we spend a lot of capex increasing capacity to meet our demand. So we do expect to maintain this trend for this current year. However, that said and done, we have aggressive plans to increase our capacity further in the next 12 to 18 months, which will again fuel the next year's growth plan. With regards to API, when will the API come online? It's a bit longer than expected. We're working on. We expect to file at least 2 DMFs this calendar year, and maybe 3 in the next financial year. Obviously, once we file the DMFs, we need to trigger those API onto our active licenses, which normally takes anywhere between 6 to 9 months. So hopefully by next year we should have a couple of products onto our licenses where we'll be fully integrated on.
Okay, my last question. Okay, yes. I remember you telling me that in January, April, and July you have your price renegotiations with your with your buyers, yes, with Kroger or Sam's Club and all. So now the price revision is done and over. So can we expect a better EBITDA and net profit next quarter?
So we have basically asked for price increases, and normally the price increases, like you rightly said, happens at a particular time. Some have happened in April, some are happening now in the month of August. While that's said and done, we still continue with cost increases at the other end. So when you do a price recommendation, you start at from one point, but if cost escalates further, it again, you're just basically it is just eroding the advantage that you would have got. But that said and done, we are seeing prices tapering down, raw material prices coming down. We are seeing oil and crude prices coming down. We do see it basically continuing in this year. But by the time it actually kicks into the system, by the time you actually see the end result of that, I have my doubts whether this financial year you will see the direct impact of all this happening. So hopefully the next year will be much better than this year.
Okay, so this year we can't expect a PAT margin of 20%. It will still be at 16%.
Yeah, around 15 to 16% is and EBITDA. Sorry, EBITDA will be about 15 to 16%.
EBITDA. Okay. Okay. Thank you, Mark. Thank you.
Thank you.
Thank you, sir. Next question comes from Yogesh Tiwari, Harihant Capital. Please go ahead.
Good evening, sir. Thank you for taking my question, and congratulations on the result. My first question is regarding the U.S. market. So, as you pointed out, that there was a high single-digit erosion in the U.S. market. So, just wanted to understand, because the revenue grew by about 25%, the volume growth would be about 30%. So, if you can share some highlights, which molecules contributed to this high volume growth, what would be the contribution of new product launches and previous launches in this volume growth?
So the new product launches are obviously you will see the impact only in the last quarter and moving beyond the last quarter into the next calendar year. So obviously we have some contribution coming in. The high cost increase, single digits, which I mentioned, is because of various factors that come into play into raw material cost, the packaging material cost, the freight cost, all contributing. And no single molecule per se has contributed to this rise. It's been our entire basket of products have basically performed and given decent revenues. There are a few products which have taken a backseat because of price erosions. But again, the pain segment, the cough and cold allergy segments, and are main contributors to this drive of growth.
And sir, how is the pricing environment in the U.S. now? So is it similar like high single digit, which was in the previous quarter, or it has moderated currently?
So far it is showing the trend, but it is showing a bit of moderation also. Now with the raw material prices, tapering down a bit, or I don't think it will go back to the old pricing of raw materials that we saw 2 years back. But I do see the raw material prices getting better. It's not at least increasing further. It's coming down. That said and done, the competition in U.S., the consolidation which has taken place, the correction which has taken place, it will take some time to see better numbers out there. So challenges remain in the U.S., but we are moving against a trend out here, and we are trying to differentiate ourselves amongst everyone else.
Sure, sir. But is the pricing erosion still similar to Q1, like in high single digit?
Yeah, it is very similar to that.
And any consolidation happening in the oral solids in the US because of this challenging environment? Any companies which have shut down operations or maybe?
No, actually, consolidation is not happening from the company standpoint of view, because companies are getting, they are flushed with capacity, and the demand is lower than what it was peak of COVID times. But there's obviously the impact of what you see with a lot of companies is basically the consolidation in a distribution channel, which is basically having an impact in the demand and supply situation. And this is creating obviously price erosion happening and oversupply happening out there. So it will take some time to correct, but I do believe eventually it will correct.
Yeah, and any data around what would be the inventory of pain management in the US, because that might be one of the factors behind price erosion. So any data between now and previous quarter for pain management?
You're talking of inventory? You're talking of inventory?
So basically what we understand is like there has been some build-up on inventory in the US market, which led to price erosion in previous quarters. So
no, I don't think that would be the right statement of inventory built-up. I think it is more with demand and supply situation. So there is more supply, more capacity, more capabilities, and the demand has come down. So obviously that's where companies tend to take aggressive stands to utilize their capacity. So that said and done, I don't have the numbers of what the inventory is, obviously, but I do believe it is mainly related to the capabilities and the capacity versus the actual demand in the U.S. market. So obviously, U.S. is, although on the verge of recession or maybe going through a recession. So there has been a slowdown in the demand.
And sir, we are looking for a price increase in August. So what would be that quantum, like in the range of how much percentage would we look to increase prices?
It's difficult to mention because it is product specific to product specific, and based on molecules where pricing has gone higher, then we are basically trying to pass it down to the clients. And the molecules where price increase has not happened, then we would not be increasing, and the price wherever increases happen very negligibly, we pass on negligibly to the customer. So there is no fixed thumb rule that throughout the product basket we are going to increase it at X percentage. We don't do that.
And sir, lastly on the raw material, so the raw material prices have come down, but we must be having some high cost raw material previously. So how many months or when can we expect this benefit of raw?
Yeah, that's a good question actually, because we don't with such a struggling supply chain, we cannot sustain our commitment with less inventory. So we normally keep minimum 4 months of inventory, 3 months on hand, 4 months on hand sometimes, and 1 month in transit. So we are sitting on a good 4 months plus inventory at our end. So that's where even if the price improves, you will not see that results for another 6 months plus.
Sure, sir. Thank you. That's all from my side. I'll get back into you. Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, if you have a question, please press star and 1 on your telephone keypad. We're having a question from Perit Chaudhary from Green Portfolio. Please go ahead.
Good evening, sir. So my first question is related to the fall in revenue numbers in QOQ in Australia and New Zealand. So are there any reasons for this happening, or what is the reason behind it? I just wanted to know.
No, hi, this is Jitendra here. Sorry, we couldn't get you properly. Which market you were talking about?
Australia and New Zealand. So I'm looking at fall in the revenues in QOQ figures.
Yeah, okay. So the last quarter, the Q4, there was bit of incremental demand on pain management in Australia on account of the COVID, flare up. So there was a good lift up, resulting into, higher sales in Q4 in pain management segment specifically. So that is the reason. But I think from Q1 onwards now it is stabilizing, and I think the Q1 numbers will give you a bit of idea in terms of the trend of what we are likely to achieve in this year so far as the Australia and New Zealand market is concerned.
Okay, thank you. And my next question is related to the acquisition. So in the last con call, you had mentioned that you would be acquiring for formulation manufacturing operations, and also for the land in Madhya Pradesh, you are planning a greenfield expansion. So are there any dates for the same? What the company plans are?
Yeah, for the manufacturing facility, obviously we are in dialogue with companies, and we are hoping that in the next couple of months we would be in a position to put pen to paper. With regards to the greenfield project, the land that we have taken, obviously it's all revolving around the facility. If we can close this transaction, then we will take it. We will explore whether we move forward with the greenfield project at this stage or at a later stage.
Okay. And apart from that, in the investor presentation, you have mentioned couple of acquisitions or the growth plans you have. So if you can provide any timelines, what plans you are currently working, or what could be the possible, when we can see the possible results for the same?
So acquisitions and M&As are very unpredictable. We don't, unless we are nearing something where we believe there could be a possibility of signing something. It is too early to mention that. Obviously, like I've always said in the beginning of the year, that we are optimistic that this year our focus is going to be to expand our geographies and our footprints and the market. So we are working on that, but presently there's nothing much to say about it, because we don't have anything concrete beyond what we have already spoken about.
Okay, thank you. That's it from my side.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, if you have a question, please press star and 1 on your telephone keypad. We are having a follow-up question from Manoj Matthew Jacob, an individual investor. Please go ahead.
Hello, Mark. I've got one more question to you.
Yes.
We did 433 crores and 60 crores net profit, and we have 19 crore cash. So the rest, has it gone into investment into capacity expansion?
Did you say how much cash? Because our cash
19 crores.
No, our cash is 300 or
No. I'm talking about this quarter's cash accrued to the company. The June quarter cash with the company is 19 crores.
Yeah, hi, this is Jitendra here. So basically that cash, we started the year with the cash of around 349 crores. Yeah. And in the quarter, we did one acquisition of Access Healthcare, where we have invested around 30 crores. So after utilizing that cash and the cash accrual, with the quarter and whatever working capital adjustments we had in the quarter, the cash balance for the quarter was 39 crore. So basically, it got utilized in the working capital movements and partly towards the acquisition of Access Healthcare also.
Okay, so when do you think you will crystallize the OBBED preferential issue? Like 375 crores, when it comes in, they don't intend to put it in your balance sheet. Definitely, you're in talks with for some acquisition or for some CRAMS, something like that. You're not looking into CRAMS?
No, we are not looking into CRAMS. Of course, the money will come into the balance sheet. It will definitely increase our cash balance. And eventually we are planning to utilize it for the growth-related avenues. So eventually it will get invested.
But don't you not think there are lots of formulation companies now in India up for sale? API, of course, it's difficult, but formulation companies, there are many, I think, now up for sale.
We are looking at various possibilities, and we are working on that.
Okay. Okay. Thank you. Thank you.
Thank you.
Thank you, sir. Next question comes from Madhav G from Sastra Capital. Please go ahead.
Yeah, good evening, sir, and congratulations for the good numbers. See, I have a query. Right now, I think the platform is well set for us, having very good cash balance, and actually, so what is our actually the future growth plans for increasing the turnover from 2,000 crores and above?
So basically, obviously, our growth plan is within the same markets. I do believe next year we should be trending towards the next milestone of 2,000 crores. We have to do a lot of investments to grow beyond to take us to another level, and for that there may be some M&As, capacity increase, and product pipelines which will drive the growth further.
Is that it will be the same kind of pipeline or something like any complex kind of working, or are we actually working on it?
Obviously, as the company evolves, the pipeline evolves and it gets more complex. So we are working on different segments, formulation segments, complex molecules. We are venturing into creams and ointments. So we are getting into different segments, like I mentioned. So the formulations will get more complex as we evolve.
Okay. So are we looking at something like injectables or something like, or are we within the same ointment kind of thing we are looking at? So the complex generation.
No, injectables presently we don't, at least for the next 12 months, we don't have it in our near horizons. We've got a plate full with the product pipelines and our wish list of products that we want to invest our resources on. So obviously we are trying to invest wisely and to ensure that we basically get best returns out of our investments.
Yeah, and I have another question, sir. Actually, when I'm going to the raw material cost of metals consumed, the cost of metals have gone up between Q4 to Q1. So what could be the reasons? I think about 500 basis, but it has gone up. So what could be the reason between Q4 to Q1?
Hi, this is Jitendra here. You see, there are various reasons here. The product mix, of course, plays a important role. And the pricing pressure on the input cost pressure again continues, on raw material pricing also even during this quarter. So largely it is the product mix, which can have the different gross margin outcome at the quarter end.
Okay. Okay. Can we expect it will be improved in this the running quarter, means Q2 and onwards? So can we expect that the Q4 kind of raw material cost, the conversion is going to be?
We are expecting it to remain at these levels, at least for next 2 to 3 quarters.
At Q1 level or Q4 kind of level, sir?
At Q1 levels.
At Q1 levels. Okay.
Yes.
Okay. Yeah. Thank you, sir. Thank you. That's all from my end.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, if you have a question, please press star and 1 on your telephone keypad. We are having a question from Sachin Kasera from S1 Investment. Please go ahead.
Yeah, good evening and congrats for a good set of numbers. I had a few questions. One, you mentioned in the presentation that you intend to increase the R&D from 2% to 4 to 5%. So one, if you could give a sense, this will happen over what period of time? Secondly, this increase that we will see, will it basically mean that we are looking to move up the curve and start filing more complex drugs, or it will be more driven by that we will now have far larger number of filings?
Yeah, hi. So basically, in terms of R&D, I think our spend is going to gradually increase. It's not going to happen in the next 6 months, but we are planning to invest more into more complex molecules with cost going up. our spend in R&D, we do foresee in the next 2 years will eventually migrate from a 2% to a 4%. And the molecules will be in the complex category, and like I said, as the company evolves, the molecules get more complex at every stage. So we are not actually going with a philosophy of number of filings. Obviously, because every ANDA cost a big sum of amount to do filings. Nowadays, ANDAs are not are not free, so they do charge a huge amount for filings. So you got to be very selective in your development and your filing with a vision that the product can see light after 2 years.
Sure. Second question is on gross margin. So from what I can see in the presentation, compared to the March quarter, there's a sequential improvement in the gross margin. And you have mentioned that because of the consolidation and the type of demand supply which is there remains pricing pressure. You also mentioned that we are trying to take some price hikes. It's a little confusing. On one hand, we are witnessing price hikes and low demand and hence pricing pressure. At the same point of time, we are seeing sequentially improving gross margins, and you're also talking of price increase. So it's a little confusing. So if you could tell us how this interplay of those two things will play out as we go ahead.
Hi, this is Jitendra here. See, this is a continuous process. So on one side, we are seeing input cost pressure, wherein the raw material, excipient, packaging material prices are increasing. On other side, definitely we are trying to pass it on to our consumers. So these are parallel activities, which we keep, which we are trying to do, try to work on. And, so that's where, as I said earlier, the gross margin improvement basically in the quarter was due to, the product mix, the price, the price increase which we are seeking from our customers. So that's another activity which, we are continuously trying to have with our customers.
Yeah, I understand. Again, coming to the question, it's a little confusing. On one hand, we are saying we are able to get some price increase on products, and secondly, we are seeing there's a lot of pricing pressure.
Yes.
So it's a little confusing for us. What is the reality?
So these are the continuous activities which we are having. So and they are independent of each other. I mean to say the price increase. The raw material price increase are happening, which everyone knows, what is happening in the chemical and the API sector. The oil price increase has a lot of pressure on the packaging material costs also. The aluminum prices are increasing, which is the main ingredient for our packaging material. So the price increase is one part which is happening, and that is what we are trying to pass it on to our consumers. So that's where though there is a pricing pressure, but then there are few products where definitely we are in the we are able to pass it on to our consumers. So it's a mixed bag wherein some products are seeing pricing pressure, some products we are able to pass it on to the consumers. So it all depends on the product, customer, OTC, definitely some products we are able to pass the price increase to the customers. RX, we are finding it difficult to pass it on. RX, we are seeing a lot of pricing pressure. OTC, relatively pricing pressure is on lower side. So it's a combination. It's a dynamic situation out there in the business, in the today's market situation overall.
Sure. So the next question is just a follow-up to this. Your presentation mentions that, the share of OTC is increasing continuously. So if you could tell us a little bit, one, is it that in OTC, the pricing pressure and the gross margins are a little better? And how do we see this ratio coming up? And secondly, within OTC, you have mentioned about store brand and own label. So again, is there any margin difference between the two? And how do we see this evolving, the OTC share between own brands and private labels?
No, so the store brand is pretty much, and the private labels are the same. In terms of pricing, pricing competition is there in every segment, every in every category of products. However, out here, the OTC obviously is more service oriented. So they do give you some advantage out there. There is obviously a level of stability and predictability in OTC. We are very strong in the OTC because historically we have always given equal importance to OTC. So it has and our competitive edge is our product portfolio and our manufacturing capabilities, where we leverage low-cost manufacturing base, which have helped us to gain more market share on that. The volatility in RX is obviously a different issue where pricing pressures, because it's on your own label, pricing pressures are more prominent in prescription products than in OTC. But that said and done, OTC business model revolves on contracts, but during the negotiation of contracts, there's always pricing pressure out there.
But net, would you say that you get little better margins in OTC versus RX, or they are the same?
I think they are pretty much at same. So I would not say RX. The advantage of RX is you do get short-term gains also. So you can because RX volatility is very high. So when it hits bottom, but when it goes up, you can see some advantage out there. So you do see the ups and downs in RX. OTC is more flatlined, where that is concerned.
Sure. And the last question is on the capex. There's a mention of 200 crores capex. So this is mainly for capability building, or is it that we are foreseeing that we may run out of capacity, hence we are looking to increase the capacity, and that's the main reason for doing this 200 crores capex?
So it is both. Obviously, it is we have to have a forward-looking statement as to what we anticipate for next year and the year after that, and capex takes time. So it takes 6 months to get machines and to put it in place, everything like that stuff. So definitely you got to invest today to see returns tomorrow. That said and done, the investment includes both new infrastructure to basically meet complex molecules, at the same time expanding current infrastructure to cater to our existing products. And it may involve a bit of M&A in terms of the manufacturing facility that we are pursuing. It may involve that to ensure that we get to another level.
Thank you.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, if you have a question, please press star and 1 on your telephone keypad. We will wait for a moment while the question queue assembles. We are having a follow-up question comes from Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir, for the follow-up question. Sir, can you share how many products are you looking to launch in the US for this year and next year, and also for UK?
So basically, in US we are looking at nearly 4 products this year, and next year another 4 products, 4 to 5 products. And obviously UK, we have filed nearly about 10 products, where we do see at least 3 products seeing the light. The previous year's filing, 3 to 4 products will see the light this year. But we have a wish list of in the next 24 months to file nearly about 25 products in the UK market, and very close to 12 to 14 products in the US market.
So basically, we'll be launching about 4 products in the US this year and 4 in the next year, if I got it correct?
Yes.
And in the UK, about 3 to 4 this year, and next year, any targets?
Yeah, it'll probably be about 6 odd products next year, 6, 7 products next year.
Okay, 6 to 7 products. And sir, lastly, what if we can get in the rough range, what would be the margin differential between OTC and prescription products? What would be the
It's
difference in
difficult.
margin?
It's difficult to mention that because, like I mentioned in my earlier reply, RX is highly volatile, and so while there are good days, you may see bad days also, and sometimes molecules are just not affordable because of the volatility and demand and supply situation. OTC is, like I mentioned, flatlined. It is basically much more stable. So if you look at the opportunity, RX sometimes throws you good opportunities, while OTC is more predictable and you know what to get. So it's difficult to actually put a number and to say the difference between the two, because if the RX is active, we make sure we don't go below a thresh point, which is pretty much what we enjoy in the OTC. We ensure we launch product, we keep our RX active to that thresh point, so we don't have a big difference between the RX and OTC.
So normally it will going forward, 2-3 years, it will remain in the same range.
It will remain in the same range, or if the RX comes down below that range, then we decide we will just stop for some time, and we get back into the market at a different time, at a different stage. So we try to ensure that we don't we service accounts where we at least make our desired bottom line.
And sir, last question on the US versus UK market. So is the proportion of RX and OTC similar in both the markets, the US and UK?
Well, historically it was similar, very similar. This year, obviously, because of price erosion, high price erosion in the RX part of it, that's where I mentioned on the volatility. The OTC has taken a bit of the front lead in terms of market share, but we are hoping that the RX eventually will come back and take, and gain some grounds. But I do see in the US OTC being the front leader compared to the RX part of it. So historically we were 49-51%. Now I do believe OTC may go to 60%, and so OTC being 60-65%, and RX being 35 to 40%.
Thank you, sir. That's all from my side. Thank you.
Thank you, sir. Next question comes from Eamon Kanungo, an individual investor. Please go ahead.
Yeah, thanks for the opportunity, sir. So looking at the current result, can we expect similar momentum for this particular quarter going forward?
Yeah, I think that's our hope, and obviously we are in control of only what we do. We don't have global. We don't have control on the global scenarios that happen. But we are hopeful that we will continue these numbers in the coming quarters also.
Okay, sir. And so can you guide us when is the next US or auditing of our facilities across all three facilities?
I don't have. I don't predict those timelines, but it's left up to them.
Okay, but generally it is every 5 years, or is it just any random
No, it's random, and it's not 5 years. It's normally 2 years or 3 years. It's 2 years basically, but it's very random. They can come in 6 months also. So it just depends.
Okay.
It depends on filing, based on filings and based on what they want to
sir. And in the year 2016-17, we had some issues with the US FDA. Okay, so how today, seeing today, how better are we placed?
So we didn't. I must correct you. We didn't have any issues with the FDA. We had in 2015 with MHI, but not FDA.
Okay. So how better are we placed today in terms of related to our inspection of our facilities and everything, and the measures and everything?
Oh, we have evolved. We have progressed a lot.
Okay, sir. Thanks. That's it from my side.
Thank you, sir. Ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. I repeat, if you have a question, please press star and 1 on your telephone keypad. We are having a follow-up question comes from Sachin Kasra from S1 Investments. Please go ahead.
Yeah, hi. You mentioned that you are looking at some 4 launches in US this year and next year. You also mentioned in the presentation that you have around 4 soft gels. So can you tell us whether these 8 launches in the next 2 years does include all the 4 soft gel launches? And secondly, if you could give us some more granular details about these 4 soft gels, what is the type of addressable market and what type of revenue potential it can have for us?
Yeah, I mean, see, Subgel is a part of our business module, but in terms of they're all niche molecules. So I mean, we do basically focus on more niche molecules. We don't look at any molecule being blockbuster out there. But the approvals that we are expecting are both solid oral as well as softgel over the next 2 years. I would give more importance even to our solid oral dosage molecules, where because they are more complex in nature. I do believe we are getting into more extended release products, so that gives us that again showcases or highlights our capabilities of getting into more complex molecules. So those are niche molecules, and they will play equal importance as soft gels.
Sure. Secondly, on the UK market, last 4 or 5 quarters, our revenue rate was around 150, 155 crores. This quarter, we gone to 181. Is there some one time in this, or because of the new launches and better maybe market share, this is a new run rate that we should look at?
Well, it is better market share, new launches, basically that is resulting into that growth.
So should we assume it more like a sustainable number, this 180 crores a quarter, and maybe it can probably improve a little bit from here going forward?
Yeah, I think it's fair enough to assume that.
Sure. Secondly, on the ROW markets, we have shown some strong growth last few quarters. So can you just comment a bit how is that market doing and what are the expectations there and what is the type of outlook you are seeing there? Any new geographies we are targeting, or what is bringing this type of traction in the ROW markets?
Well, we are targeting more products launches. Again, new products, more product launches, newer markets. We are exploring markets to add value, and obviously now with this new baby of Access Healthcare in Dubai, we do plan to tap onto the Middle East also. So, yeah, I mean, it's basically new launches and new markets that are basically fueling that growth. And obviously, the base being very small, the growth, the numbers when it grows, the percentage looks larger because the base value is small.
Sure. And one thing on this Access Healthcare, what was the contribution this quarter from that? And means where do you classify this as part of ROW markets, mainly the sales from Access Healthcare geographically, and what type of benefits or growth we are seeing from that particular company?
Well, we just got 1 month in the quarter, so it is not very large. So the revenue was very close to 4 crores in terms of what it contributed. We have so because we acquired this only on the 1st of June. So technically, only the June month revenue came into the quarter, and yes, it falls in the ROW, rest of the world.
And as you just mentioned in the previous question, that with it coming into the fold, you see ROW markets doing much better now with Access under your belt.
Yes, I do believe it will look much more better.
Sure. Just one last question. Any sense on what is the type of capacity utilization would be running across all our plants?
That's basically we are looking at between 75%. 75% we are running at 75% capacity. However, as we speak, we are investing into more capacity, more machinery expansion. So, as those machines come into play, our capacity keeps increasing. So we are trying to stay one step ahead of the demand.
Sure. And just last question on the overall EBITDA margin. If I see at the last 12 quarters, we have seen improvement from 13-14% to like almost 27-28, and then again correct to 15-16. So what do you think? So there's a lot of volatility. What do you think with the type of changes you are doing to the business model in terms of getting into more complex and better markets? What do you think over the next 2 to 3 years, not from a short-term perspective, the more sustainable EBITDA margin for our company?
Yeah. So, I mean, this year we anticipate about 15%, 15-16% would be more realistic. And obviously, we are hoping next year will get better if the market scenario and pricing pressures and a lot of ifs are there. But we are hopeful that that will ease down. And with that, our EBITDA will go back to what it used to be. But it's not going to be overnight affair. It's going to take some time to migrate to that levels. But right now, for this calendar financial year, we are talking of between 15 to 16%.
But over a 3-year period, do you think 19-20% margin is achievable, or you think that would be a very tough ask?
No, I think it is achievable, and we are very hopeful that we will be out there.
Sure. Thank you and all the best.
Thank you.
Thank you, sir. That will be the last question for the day. I would now like to hand over the floor to the management for the closing comments.
I thank all of you all for participating in this Concall, and please be safe. And my regards to everyone at home. Take care. Bye.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using DoSabha's conference call service. You may disconnect your lines now. Thank you and have a pleasant evening.